Hi, how are you? Welcome to today's video. This is the price action analysis video of the 16th of May 2022. This is the Pivot Trade, the channel that teaches you how to benefit from trap traders using very simple techniques. First of all, today I want to request you to please go ahead and watch the re-uploaded video of yesterday that I had launched, that is on the Saturday. The problem being with the initial video that there was some loss of audio, and please go ahead and watch the second video also. Even if you have watched the first, please watch the second in full, because it basically tells the YouTube algorithm that this video is being watched by a lot of people, and so it will be recommended to other viewers as well. So if it helps you, please go ahead and watch the entire video, the second one that I've uploaded. Okay, now coming back to today's video, let's see how Nifty and Bank Nifty did today, and we will start with the first candle as we always do. So let's see let's study price action in the first candle. Now this was the first candle of the day, and the first candle, as you can see, had a large body and a relatively large wick also. So could you see that the body was more than 50% of the wick, but the wick was also pretty large. What was the wick suggesting? That yes, there was selling pressure here, but during this entire session from here up to here, the bulls had come back in this particular 5-minute session. You can see it very clearly from this price action here. You can see that this is the territory of the bulls, right? And you can see that this is here are the bears. So the bears were strong enough to push the price in that particular 5-minute session from this point to this point, but then the bulls had come into the fight here, and you could see that there was a support of the PDL here. Now PDL, as we had said in that particular Friday video, that it's not a very strong demand zone per se, because the price had not bounced from that previous day low. But I always keep telling you that the PDH, PDL and the CPR are very important levels for a price action trader. It is where most of the action happens. So as now you can see here, the very second candle was a big bullish candle here, right? So who were sitting in this particular candle? It was bulls sitting in these candles, or buyers. So what did the buyers do? What do we normally do? We tend to analyze where the buyers are, what the behavior of the buyers is, and where the sellers are and what their psychology is. So here, this entire candlestick, you can see, has been wiped out by the second candle here, and it has broken this high and gone up here. Why was that? Because people who don't trade with the CPR, you can see the CPR is right here. Those who don't trade with it, they tend to jump into this particular candle when they see that it is a big red candle, a powerful red candle, and they think that the day low here is going to be broken, and then they can make big money when the price crashes below the day low. So a lot of enthusiastic, inexperienced and retail traders are sitting in this particular red candle, and the central pivot is right here. You can see that the central pivot is here, and this is the top central, and this is the bottom central. And looking at this particular CPR, I had actually tweeted right up in the morning very early that this particular candle, I get very excited when I see such candles form right at CPR. Why? Because when such candles are formed, these candles have a lot of sellers in them here, and then you have this particular CPR also right on top of it. So CPR is going to act as a very strong resistance, and sellers are going to defend the territory very strongly, especially when you have such a wide CPR. And so going long in this particular, or rather going short in this particular red candle, when you see it, excitedly going long on or short on that candle is not and never a good idea. Because if price tends to reverse like it did today, the move can be so explosive that the price can explode right through CPR. And so when you see such kind of red candles, wait for price action to show you what type of day it is going to be. Look at this, it's already showing you that there is a big wick on the bottom. What does this show? That there are buyers here. Strong buyers have been able to push the price up in the 5-minute session itself. We are trading on 5-minute candlesticks, right? So don't get enthusiastic and burst into a trade in the very first candle itself. Wait for price to show you something. And even if you were to trade after the close of this candle, where were you going to take your stop loss? At the PDL? This is not the place to trade, because your SL would be on the high of this candle. Then this particular stop loss and this particular profit is never a good risk to reward. So wait, don't jump into the trade here. Either wait for price to go back here and wait to see if there is any particular red long tail pin bar being formed here. So something like this, if you see at this level, then you can be assured that this price is going to reverse from this position here. So then you can short this particular pin bar. You can place a short entry after this pin bar is formed with your SL somewhere above the top CPR, and then you can take your profit at the day's low, which is this particular point here from where the base was formed. But you need to see price action like this somewhere on the high of this particular candle here. So the high has to, or the central pivot at least has to hold as a very strong resistance. So that is why I keep telling you, don't trade like inexperienced new retail traders or novice traders. Trade like professional traders. That is why I had tweeted in the morning that I get very excited when I see such a candlestick at the CPR, because if price reverses back to the high of this candle and the central pivot holds, then if we see some sort of a bearish pin bar here and the candlestick shows us that there is a reversal pattern there, something like this, then we can easily go ahead and short this low. Alright, so that is why I explained to you twice as to how you should be trading such price action. Okay, now why were these big huge green candles formed right up to here? These green candles were formed because when novice traders jumped into this particular candle and they went short here, they had their stop losses on the top here. Some had it above the high of the red candle, some had it above the central pivot, some had it between the central pivot and the top CPR, and some had it above the top CPR. And so all these SLs were blown and this area was full of SLs, and that's why the price went right through the CPR. And I had tweeted that you should not run behind price. Do not run behind price. Hold your horses. Don't suffer from FOMO is what I had tweeted in the morning also when I had seen these particular green candles happen, because I knew that this breakout would not sustain and this price was bound to reverse from there. Where did this come from? Am I a magician? I'm no magician. I just have experience in trading of many years and I'm observing only Nifty and Bank Nifty day in and day out. So now they have become like my friends. I know their personality. I know from where they will reverse. I know from where they will break out, and I know exactly from where they will react how. So I was not trapped in this particular candle. I was neither was I trapped in this particular candle. So this was a no trade day for me. There was no position in the market which I had taken today. Okay, so stop thinking like novice traders. Start thinking like pro traders. Start thinking like professionals, and that is the reason why I'm running this channel, so as to ensure that you all know how to trade and how to read price action. See, whenever you see such a wide CPR, I had mentioned in the tweet that the CPR in Nifty is wide. It's wide in Bank Nifty also. So in Bank Nifty it was more than 250 points, and I had said that in Nifty as well, if you can measure this here, I had said in the tweet that it is around 90 points. So you can see that the CPR is so wide. So when it's a wide CPR, you should side yourself up with the reversal patterns. Okay, what are the reversal patterns? Whenever the price reverses after hitting the day low or the R1. So you know that whenever there is a wide CPR, the price will either reverse from the PDL or the S1 or the PDH right here or the R1 right here. Okay, so if the price goes up like this, it takes resistance and comes back, then this is your place to go long if you see a pin bar formation here. Now when the price opens here and it goes down like this, if it takes support here, or if it goes down like this and it takes support here and it starts coming back, then this is the place here or here at the central pivot where if you see a pin bar formation here like this, then this is the place where you should go and short this area. Okay, so always remember, with a wide CPR, either trade when the price goes back to the CPR at the day's low, or trade at the day's high. So if it's a red candle, you can trade at the day's high or the central pivot. If it's a green candle, you can trade at the day's low if it opens at the CPR, or at the central pivot right here if the central pivot is close to the day's low. Okay, so that is the way you should be trading on wide CPR days. Forget about breakouts. Forget about trading such breakouts. You don't trade breakouts. on wide CPR days. If you stand by CPR will ensure that the market stands by you. Always ensure that. And when you don't enter a trade, okay, so don't enter. If you don't enter a trade, there is no loss. I know there is no profit also, but more importantly, there is no loss. If you don't make severe losses in the market and consistent losses in the market, then some or the other time, today or tomorrow or maybe a few months from now, profits will start coming in very quickly and it will start accumulating wealth for you. Okay, so always remember that you have to take care of your losses. That's all you need to take care of. So don't make wrong entries, don't enter in the wrong places. I hope you understand this. I'm trying to hammer that point in every analysis video because I want you to understand the places where you should be entering, places where you should not be suffering from FOMO, places where you should not get hyper excited and overexcited and trade something like shorting this candle. And so you could see that here after the breakout did not sustain. It took support or resistance at the weekly pivot. You can see that there is a weekly pivot coming here. You might not be able to see that line, it's in yellow, but there's a weekly pivot there and it took resistance at the weekly pivot, and price actually went there and came back down again. And then you could see how it has spent time here going sideways. Then it went right through the CPR again. Anyway, the CPR was not much important here because it had already been broken once to the downside and the central pivot was also broken here. Okay, so usually you will see that whenever price is very much close to the CPR or opens within the CPR, it will tend to go through the CPR many times or multiple times within that one trading session. And this I'm telling you out of a lot of experience of watching Nifty and Bank Nifty alone. And that is the reason why I tell you to choose your instruments very carefully and trade only those instruments, and particularly only those instruments day in and day out that will help you to understand the personality of those instruments. I was waiting for the price to come back to the day's low, but the price did not come to the day's low. Instead, it took support exactly at this point and it returned. Now, why was I waiting for price to come back to this position here? You could see that price had bounced from here, right? So who are sitting here? Buyers are sitting here. Again, apply a very simple technique. Ask yourself, ask your head. It's a very simple logic. If buyers are sitting here and they have been able to take out this red candle in the very first candle itself, or the very second candle itself, then the buyers, this definitely is the buyer's territory. Then the buyers are definitely strong. So if price comes back to this area, the chances are very high that the buyers will defend their territory very strongly and not allow price to breach that area. So then if you were to see some sort of reversal pattern which you got to see right up here, instead if this pattern was formed here, then you could have taken a long trade at this position while keeping your SL below here. And then where would your target be? It would have been somewhere at the central pivot itself. Why? Because you can see that the central pivot is where price had, once it was broken, taken resistance one more time, although it was broken here, but it had taken resistance there and it had come down, right? So this was the previous swing high. You could see this point. So trading here or here and keeping your SL here, and then your profit booking would be here. So this is where you would book your profits. And so you can see how this would have been your SL and around about this would have been your target. So that is the way to trade. Take care of your position sizing, take care of your risk to reward. Always ensure that you trade with 1:2 risk reward. Never trade with anything less than 1:2. Okay, but this sort of formation should have been seen at this particular level where this particular low was. Doesn't make sense to go long here. Okay, doesn't make sense to go long here and keeping your SL down here. So your SL would be this big and your profit level is here. So that is not the way to trade. Okay, this is not going to be a good idea to trade. So that was one probable trade there. Here there was no trade, here there was no trade. The only trade was here if the price had come back to this area, and I waited for price to come back to that area, but it never came to my area. So fine, I was sitting out of the market today doing nothing actually. So you should be brave enough and you should have that much maturity to stay out of the market even when you know that you might have a missed opportunity, or you might not really have an opportunity to trade. Even if price has bounced from here, it doesn't matter to me because my buying point were here. So in yesterday's video I said that you should always buy at a discount. You go out to different shops and you ask for discounts, right? So why not buy at a discount in the stock market? Always buy at a discount, always buy at a discount, always ask for a discount to the market. If your buying price is here, ask the market, why should I buy there? I want to buy here. And always buy at a discount. Don't buy here. What is the difference between those two? Let's measure it. If you were to buy somewhere here and if you were to buy somewhere here, the difference is almost 60 rupees, right? So why would you buy something 60 rupees more expensive when you have the opportunity to buy right here with a 60 rupees discount? So always ask yourself why you would do that. The reason why I said that I would buy here was because if I know that the buyers were sitting at this position here and my SL were to be here, then what would have happened was that if my SL would have been safe here, I would have been confident to go long here because I know that buyers are sitting here in this position right from the opening of the day. Okay, and when price reverses to that position, what happens to all the traders who are trapped in this red candle? In this red candle, you know that there are a lot of sellers sitting, right? And there would be a lot of sellers who have gotten their stop losses triggered in these areas. But there are a lot of traders who are simply praying and they are simply hopeful that the price will start going into their direction now or later. And suddenly when price starts to come down, now they are super happy. They say, yes, the price is coming down to my area. And now that the price comes to this point, they say that, okay, I have spent the time looking at deep reds here, because they will be looking at deep red MTMs, right, in the entire area from here to here. So they are happy. And now at this point here, when price comes back, they know that they can get out at break even. So now they'll get out, they know that they can get out at break even. So they are happy that they can get out at this point. And also there are new traders who are called responsive buyers who will enter this position, who know that they have seen a bounce coming at this area. So new buyers will again jump into the market, seeing that this was the previous swing low here and this was the previous demand zone. So they know that this is a previous demand zone. So responsive buyers will now enter the market and that will take the price upwards. So this is how you should read human psychology. So those who are praying, those who are hopeful will get a chance to get out of the trade when price comes here at break even. So they'll be happy about getting back down at break even. So if they get down the bus, what is their order here? The original order is a sell order, right? They're pushing in sell order here and they would have sold at this point, and here at break even, when they get out, their orders are going to be buy orders, plus new buyers are going to jump in, and that is why the bounce coming from here. Okay, so I hope this idea has been drilled in properly and you have gotten the idea of how you should be trading at the demand zone, or why you should be going long at the demand zone. Alright, so now looking at this sort of price action, you can see that there is a very nice bullish pin bar that has been formed on the 15-minute time frame, and you can see that this is a sign of extremely strong bullishness. So in 15 minutes you can see that candlestick which we will mark, and that actually coincides with today's previous day low also. So it coincides with the low of the 13th May. So it's a good sign that the low of the 13th May has not been broken today. You will be able to see that on the daily chart also, and you can also see that the PDH is a supply zone. So we will go ahead and mark the supply zone as well. You can see here PDL, the high will be marked as a supply zone, and you also have a day low here, the R1 here very close to the day high. So you don't need to mark a zone like this. If the R1 wouldn't have been there, we would have marked a zone there. Also, you don't need to mark a zone down here, because we know that the S1 and the DL are very close by to each other. So just keep in mind that tomorrow, if you were to see that price is coming back to this area and if you are in a short trade at this position, just ensure that at the level of around 15767, which we have marked here, around this area and this level, you don't keep any trades open. Okay, so just keep that level ready just as a support. So ensure that you close your trade around the 15767 level today, tomorrow, if you are in a short trade here. And what do we see on the daily time frame in Nifty? Let's see. We've seen a doji today, which has not broken the low of the previous session, and the previous session hasn't broken the low of the 12th of May. Okay, so this is a good sign, and the day closed today is around 15842. So it's good that it hasn't broken 15800. Now we have a swing low, or this low that is very important, the low being 15735. Okay, this is the low of the 12th May candlestick, and that is the next hope that we have for the market before it tumbles further. So let's see what happens. Of course, as intraday traders, we are not really worried about that part, but yes, the investors, for all those investors and those positional traders, if you are in any long positions right now, I would suggest get out of your positional trades, but investors don't really need to worry about it. You can just keep adding on to your positions at this point and keep acquiring more, but that logic does not work in trading, mind you. Okay, so this is all for Nifty. Let's head over to Bank Nifty now. Let's see what important levels we have in Bank Nifty. Okay, let's first just analyze Bank Nifty. Again, Bank Nifty had a very wide CPR, 200 points CPR, and definitely on such days, either one should not trade, or one should simply wait for the highs of the day to be achieved, or the lows of the days, or rather I would say the extremes to be achieved. What do I mean by this? See, there is something called a concept called initial balance high, which is IBH, and initial balance low, which is IBL. Okay, and these concepts mean that whenever there is a first 1 hour high and low, where you see that this particular low and this particular high are the first 1 hour high and low, you can see how this is the 10:15 AM candle, and till 10:15 AM the price has formed this low and this high. So this is a very wide first hour high and low, right? A very wide first hour high and low. And what does the high and low show us? That because this is such a wide high and low, we see that the day will usually trade between these two levels here and the PDL. Basically, this is the IBH and this is the IBL. The initial balance is the first 1 hour high and low. That's what the IB stands for. Okay, initial balance. And whenever you see that there is an initial balance high, now here whenever price comes back to that area and forms spin bars, then you will see some sort of selling from that area. Okay, of course I do not trade on the IBH and IBL, so that is not one of my patterns, but this is one of those patterns that you might be able to use, but definitely today was not the structure to use this kind of a pattern. Okay, and the only structure that I showed you was in Nifty, where I showed you how to trade on the low of the first candle. But in Bank Nifty, although we had an initial balance high and initial balance low which was very wide, still this was not the exact way that you should have entered the trade. Here, yes, there was a nice spin bar, and here you could have shorted this, and here you could have kept your SL on top here, and then you could have traded. But then here the day was almost coming to an end, right? And it was a 2:45 PM candle, and usually after 2:30 PM you should not initiate new trades. There is a lot of volatility within the last half hour or so. So usually after 2:45 PM, around 2:30 PM to 2:45 PM, you should not be placing new trades in the market, because it's a very volatile time, and you could see how price actually went down, then it again went up. So on wide CPR days, you will see such sort of sideways price action on such days. And again, like in Nifty, retail traders jumped into this particular candle here, and then these huge green candles were formed. You can see how big these green candles are, because they have just taken out the SLs of short sellers here. So who are sitting here in this particular candle? A lot of short sellers are sitting, right? And that is the reason why then in this particular candle, in the very first candle, after this particular wick was formed and the price reversed and took out this high, all those stop losses were triggered, and that's why the huge rally here that went right through the CPR. But then you could see that it did not sustain, and it could not break R1 here throughout the entire day. So that is what you would normally see on wide CPR days, that price will usually find it very difficult to break either the R1 or the PDH and the PDL or the S1. No surprises there in Bank Nifty's price action. Usually when you find the price is very close to the CPR and the CPR is very wide, the CPR will not allow the price to really go away from itself. Okay, so you should ideally avoid trading on such days. So you could see here that there were no opportunities in Bank Nifty, and given the price action in Bank Nifty, let's go to the 15-minute time frame. Again, we see down a 15-minute time frame there is a huge pin bar at the PDL itself, and you could see here that even Bank Nifty has not broken the previous day's low, which was the 13th May low, which is again a very good sign. And Bank Nifty does not really have a very strong supply zone, but you could mark the PDH as a strong resistance. Okay, so if you're not marking those, if you're marking those lines for supply zones, then it's okay if you don't mark today's day high as an important level, but the PDH will anyway be an important level. So every day you should observe the PDH and the PDL also, whether they are supply zones and demand zones or not. So I'm extending all these levels forward. Virgin CPR from the 12th of May is right here. There's a gap on the top. We don't have any virgin CPR coming from today's price action. So this will be all for the levels in Nifty and Bank Nifty. I will post these charts on TradingView and to Twitter later in the day. Okay, so guys, thank you for watching this video. If you have liked it, please do leave comments in the comment section below and let me know how you like today's analysis, and also hit the like button, subscribe to the channel and hit the bell icon so you're notified each time I post a new video. Thank you guys for watching and thank you for your patience. I'll see you in the next one. Bye bye.